Imagine spending over 20 years and literally billions of dollars trying to build a world-class semiconductor industry. You build massive chip designers, fabrication plants, memory manufacturers, and these enormous government investment funds. And yet, despite all of that firepower, your entire industry can still be completely stalled by just a single Dutch lithography company or an American software ecosystem. It's wild, right? Well, let's dive into this paradox today. In this explainer, we're going to map out the entire battlefield of the global semiconductor industry to figure out exactly where China stands right now. So that brings us to the central mystery we're unraveling today. Just how far behind is China really? Are we talking 10 years behind, maybe 5 years? Is it just one commercial generation? Or have they actually already caught up in areas that nobody is really paying attention to? Well, the honest and honestly kind of surprising answer is that all of those statements can actually be true at the exact same time. To understand why that's the case, we really need to correct the biggest misconception in this whole semiconductor debate. You see, people tend to imagine this as one national leaderboard. America in first, Taiwan in second, Korea in third, and China somewhere behind them. But that is just not how this works. The reality is that the modern semiconductor supply chain is much more like a global relay race. Different allied nations control very specific essential stages. American companies lead in chip design and AI software. Taiwan leads in contract manufacturing at an incredible scale. South Korea absolutely dominates memory. The Netherlands controls the advanced manufacturing equipment, and Japan is essential for the raw materials. So China isn't trying to catch a single opponent here. They are literally trying to reproduce capabilities that are currently distributed across an entire alliance of highly advanced economies. Okay, let's get into Section 1, China's master strategy, from assembler to ecosystem. China didn't just wake up yesterday and decide to start building AI chips. For decades, they were incredibly successful at electronics assembly, but they realized they were basically just the world's workshop, right? They were assembling products while foreign companies controlled all the really valuable components inside, and they wanted to change that. Back in the year 2000, China issued Document 18, which offered tax support to direct capital into software and integrated circuits. But the real decisive turning point came in 2014 with their promotion outline. The government explicitly acknowledged their heavy reliance on imported chips and created the big fund to fix it. Fast forward to 2024, and strict export controls on advanced computing and equipment have totally changed the urgency. What started out as an industrial development program has completely transformed into a high-stakes national security mission. And you can really see that urgency when you look at the numbers. 344 billion yuan. That was the registered capital for just the third phase of the big fund established in 2024. To put that into perspective, that's roughly 47 billion US dollars. This staggering number anchors the sheer scale of investment China is deploying right now. They don't just want to support a few isolated factories anymore. They are funding a massive, complete ecosystem, all the way from designers and foundries down to material suppliers and universities. So how exactly are they deploying all that capital? Well, here is their 5-part master strategy broken down. First, massive capital to weather the highly volatile chip cycles. Second, utilizing their immense internal demand. Third, import substitution. Fourth, localizing the full supply chain. And fifth, system-level engineering. Now, the absolutely crucial parts of this strategy are steps 2 and 3. Because China has the world's largest electronics manufacturing base, a domestic chip doesn't actually need to defeat global leaders like NVIDIA or Qualcomm on day one. They have this huge, protected domestic market where they can start in less demanding applications, learn the ropes, and just iterate. Which brings us to Section 2, the technology scorecard, where China actually stands today. If we take an objective look at the actual battlefield to see how successful this master plan has been, we see that China is fighting multiple different races with wildly varying levels of success. In chip design, they actually have world-class engineering talent and are closing the gap, but they heavily trail in the software ecosystems that make those chips easy for developers to use. Over in fabrication, they're approximately 2 commercial generations behind the leaders at the absolute frontier. In memory, they are globally relevant in conventional DRAM, but definitely lagging in advanced AI memory. And in packaging, well, they're already globally competitive. So as you can see, it is a very mixed bag of progress. But before we just assume China is losing because they are trailing at the cutting edge, consider this stat. Industry estimates project China could hold roughly 37% of global mature node capacity by 2027. Now, these are the essential chips for things like cars, home appliances, and industrial systems. So the really crucial takeaway here is that China can be behind at the absolute frontier while simultaneously being on track to absolutely dominate the enormous market just beneath it.
We also have to draw a pretty stark line when we talk about the memory sector. China has had massive success in conventional DRAM. For example, their domestic champion, CXMT, recently had an $8.6 billion IPO. But high bandwidth memory, or HBM, is a completely different beast. HBM is memory that's stacked vertically and placed right beside AI processors for massive bandwidth. Manufacturing it requires immense ecosystem coordination across design, stacking, and thermal management. It's incredibly difficult. South Korean companies like SK Hynix and Samsung retain a massive lead here. It's a complex ecosystem problem, not just a spec sheet problem.
Moving on to Section 3, the equipment choke point, the factory that builds the factory. So, the biggest obstacle in this entire relay race isn't actually understanding what an advanced processor should do, it's building the machines that physically manufacture it. The ultimate choke point here is EUV lithography. These are extreme ultraviolet light machines, and they are essential for producing frontier chips economically. They are unbelievably complex. We're talking ultra-precise mirrors and vacuum systems, and they are exclusively commercialized by literally one Dutch company, ASML. U.S. export controls specifically target this exact equipment. Without a domestically produced EUV platform operating at a commercial scale, China is structurally blocked from efficiently manufacturing the most advanced chips on the planet. Let's look at how they might get around that in Section 4, the packaging shortcut, a system-level workaround. China isn't just standing around waiting for EUV to figure itself out. As traditional transistor scaling gets harder and harder, advanced packaging has become a secret weapon. China already has a super robust conventional assembly and packaging industry. So by intelligently packaging multiple, slightly older, smaller chips, which are called chiplets, together inside one single package, they can actually recover a good chunk of the performance gap. Basically, if they can't make one incredibly powerful chip, they can use system-level design to string several good chips together to produce highly functional computing capacity. It's a real game changer that changes the entire optimization problem. And finally, Section 5, defining strategic sufficiency, the true endgame. Look, if you take away anything from this explainer, let it be this. Total technological parity across the entire supply chain by 2030 is not actually China's primary goal. Their real goal is what we call strategic sufficiency. This is the ability to produce enough domestic processors, memory, and equipment to keep their critical industries operating smoothly, even if those products are less efficient or a whole generation behind. Success for China simply means creating a parallel supply chain where foreign export controls become an annoying economic burden, rather than a total kill switch. If they have a system that's independent enough to support their AI, automotive, and telecommunications ambitions, well, they win. So, looking ahead, policy watchers and investors should really keep an eye on these three plausible scenarios over the next 5 years. First, controlled containment, where the industry effectively splits into a premium Western ecosystem and a Chinese ecosystem focused mostly on mature technology. Second, a selective breakthrough. This is where China solves one major choke point, like lithography or AI software, which accelerates their overall progress. And honestly, this is the one most likely to catch the markets completely off guard. And third, expensive self-sufficiency. The products cost more, they use more power, and yields are lower. But the system works. For national security purposes, an expensive domestic solution is still a massive success. And that leaves us with this final, powerful question to ponder. Can China build a technology system that no outside country can switch off? You see, the real race we are watching isn't about whether China can manufacture the single best chip in the world tomorrow. It's about whether their scale, their talent, and their patient capital can build an entirely absolute parallel technological ecosystem. And if they achieve that, the global chip industry will be transformed forever. Thanks for joining me today for this explainer, and I'll catch you next time.